Our stable outlook on the global insurance segment and also in Latin America goes from the positive pricing momentum that there is across many business lines in the market. We also see reinsurers very well capitalized to face any risks arising from COVID-19 in the region, and we also see there's a greater discipline to generate underwriting profits across the business lines that are offered in our market. COVID-19 has turned into one of the largest catastrophic events in Latin America. In Mexico, it has become the second largest one. However, this has not affected insurers' bottom line results so far. We have seen that claim frequency has slowed in many business lines, including auto during 2020. There could be a normalization of claim frequency, not only in auto, but also in other business lines, including health and accidents and personal accidents in 2021. We have to see how this plays out. But for 2020, we have not seen any affectations. Of course, there's reserves that are created for those occurred but not reported events. It's something that we are going to keep monitoring. For the moment, companies have not been affected in their bottom line results so far. As the year progresses, we need to see how claim frequency recovers, but it's also going to be important to see how vaccination efforts across the region are successful and how that transform into a normalization of life. That will help only the claim side to recover, but also the top line of the business to recover, to be able to face those rising claims and possibly the continuation of COVID claims. Latin American insurers have not been affected by pressures in higher rates in reinsurance because primarily the COVID-related claims are mostly retained, because these are policies in accidents and health and business are quite profitable, and to acquire that kind of protection in the reinsurance market is still not efficient. Priorities are quite high, and the examples that we have seen in the region, it's still something that is in their mind, but it's not yet cost efficient. Now, the experience that insurance have had is also limited because of the low penetration of insurance in these markets. We are seeing the most vulnerable part of the population affected by COVID, but those are not the customers of insurance companies. Now, that's in individual policies. When we go to see the group policies, we see that there's a larger affectation there. It's still not something to worry because of the results of the companies are very strong. Business interruption in Latin America has not been a concern regarding COVID like it has been in maybe other markets like in England or in the United States. Here we are seeing regulators respecting what is mirrored in the insurers' policies, which are mirroring the exclusions that they have from reinsurers. So we have not seen any affectations here. Also, you have to take into account that any pressure that could come from the Latin American market will be very limited. Global insurance policies in Latin America account only for 5% of the total, with them being concentrated in Mexico, Brazil, Peru, and Chile. So that is something that there's catastrophic events that could be charged if they happen, but also there's very low coverage. If you take an example of this, it's the latest hurricane in Iota and Eta in Central America, that estimated for around 6.8 billion in economic losses, but that was only covered at around 1.3%. In a similar event, the US had Hurricane Sandy, which generated economic losses of around 7 billion, with a coverage of around 50%. So that really speaks on how much pressure can this market have from insurance rates. If they are going to see some adjustments, it's going to be in some coverages or maybe priorities or maybe in some terms, but right now it's difficult to justify increases in rates because of COVID or because of catastrophic events, because in reality 2020 has not been so catastrophic for the region.